in my professional life, I have always wanted to be the best at something. I just didn't know what that was. And I wanted to push myself to try to be the best. And right now I'm in a lucky position where, this is the moment, I think, for me, where I can take, a $3-4 billion balance sheet and 10x it. And so how do I do it? And in doing so, it's not the money, it's proving how good I could be in these moments where I need to be clear-minded, where I need to make really good decisions, where I need to manage my psychology. I'll give you an example. Like, as I told you, like I've been trimming where markets were down 10,000 or 1,000, where markets were up 1,000, where, and I see all these folks who would be like, oh, I clipped the top and I, covered my shorts at the bottom. And I think, wow, I'm an idiot. I mean, I didn't do any of those things. I've just been dollar cost averaging my way to more liquidity, and it would make me feel insecure. But I had to battle through that and put myself in a position now where I have an even bigger cash pile. And I can say, okay, I can make a couple billion-dollar bets here and try to 10x it. And in doing so, I can be part of the solution. I could hire lots of people. I could, solve really important problems that I've always wanted to solve. And I'm putting myself to that challenge. And so I don't regret any of it. But I'm really cognizant of this line, because if I am dysfunctional at home, I will not be functional at work. And if I fail at work, I need to firewall my personal life so that I can still be functional, because this is a moment where I've really, I'm trying to learn how to have equanimity. And I think, like, if you look at the best people in work, at any work, they have an equanimity to it. They are humble enough to realize they're a participant, that they're not some all-seeing, all-powerful, omnipotent presence. They wait for their moment and then they participate in a functional way. And that's a real skill, I think. Very few people have it. Buffett has it. Very few people have it.
Speaking of Buffett, you and him are in somewhat similar situation. I think a little bit different size, and that you have cash on the sidelines. You're being patient. You kind of understand, at least generally, where we are in the cycle, and having that patience will likely pay off. When you go to get aggressive, I think a lot of people are saying, when's Omaha going to move type thing. For you, where are you going to look? Is it public markets? Is it looking at kind of more the hard tech stuff that you've been talking in the private markets? Is it maybe something that we aren't expecting, like real estate or other assets? Kind of, how do you think about, okay, I've got a couple $2 billion. How do I 10x it? There's a lot of risk involved in that, obviously, right? And so how do you kind of think through that?
The way that I'm asking the question right now is, first and foremost, what is not going to change? And, there's a bunch of things that are not going to change, meaning you're still going to go out eventually. You're still going to travel eventually. You're still going to buy things offline eventually. You'll still, want to make things that will require energy eventually. You'll still need to eat. You'll still need to clothe yourself. You'll still need access to the internet. All what this moment is good at doing is clarifying a hierarchy of needs. And so the first thing that we're doing, and this is for us and my team and I, a multi-week process, is just re-underwriting what are our basic needs. And that's what I'm doing right now. And I'm trying to ask myself just really simple kind of basic questions where I could look at my kids, and if I tell them, here are the things that will never change, they'll be like, yeah, it makes sense. From there, and we've done this because we're a little bit further ahead in some of those sectors that we identified early. They're not super complicated. But then what we've said is, which companies have now been disproportionately punished despite basic needs that should remain relatively inviolate over the long arc of time? So I'll give you an example. One of the things that this has strained is the internet itself. And within that, I think one thing that we have realized is how misconfigured telecom infrastructure, wireless infrastructure, and the wireless providers functionally are. So let's think about this. They have physical wireline infrastructure. They have, very complicated, very expensive wireless infrastructure that doesn't really support massive throughput. They have incredibly complicated, very expensive back office OpEx to run it because they were traditional wireline carriers that try to morph. They spend hundreds of millions of dollars trying to incrementally build capacity, both in terms of spectrum as well as satellites. And then to top all of that shit sundae off, the cherry on top is that they have a physical retail infrastructure that is the only way for you to interact. If you want to switch your plan, if you want to upgrade your plan, if you want to switch carriers, they've been resistant to eSIMs. Now you're sitting at home, and even if you wanted to switch, every carrier is thinking to themselves, I can't run ads, I can't switch because I can't deliver a SIM to these people because the stores are closed. Now, take out all that dysfunction, the wireless carriers will continue to be more and more important. We've realized that we need to have a more resilient internet. We've realized that it needs to be somewhat more homegrown as well. We can't rely on Huawei or Ericsson necessarily. We have to have, internal American products and solutions. We need to service the rural areas of the country as well as the, cities. Cities have very different, complicated patterns of density and servicing that are not done well. I mean, like you go to a place like New York City and Verizon is just complete shit. So we know that the outcome is, but we don't know what the path to get there is. And we have a bunch of companies that have just gotten decimated. Now, then if you take that and you overlay those dynamics in emerging markets, what you see already is a bunch of bankruptcies. So that's an example of where we've said, okay, do we step in? Is there a company here that we can buy out of, the Chilean equivalent of Chapter 11 bankruptcy or, Chapter 7 bankruptcy? And what would that look like? Or, are there companies that we could get a hold of by buying the debt and then basically transforming it? That's an example. We've been monitoring very closely all sources of alternative data. So what's an example of alternative data? OpenTable has some incredible data. Yelp has incredible data. Second Measure credit card panels. There's a company, I can't remember the name, who we use for footfall data, TomTom. And we use that to build a complexion. And what we're asking ourselves is, what does this show in terms of patterns? Another thing that we've looked at as a result of that is in commercial real estate. So I think that commercial real estate is fundamentally impaired now. Because when you factor in, just like you and I are as productive as if you and I, by the way, just think about this. You had flown to San Francisco. We could not connect. You flew back, but you stayed in a hotel. You had some meals, blah, blah, blah. Let's say roughly you spent $3,000 or $4,000 on that business trip. You and I are creating just as much value. It cost us zero.
Yep.
So the point for you to spend $5,000 of OpEx to generate this asset is going to be incrementally harder for you to justify. It's going to be more out of pleasure and waste than it is out of need. When you factor that into how it will flow into commercial real estate is fundamentally impaired. It's essentially what Tom Barrack has said. But in a world where that commercial real estate is impaired, that's not going to be completely true. Now, there are certain REITs, for example, that only service big box retailers, specifically Walmart, Amazon distribution, and groceries. Now, they've seen 50% drawdowns as well because, you throw the baby out with the bathwater when things like this happen. And so we've been going bottoms up in certain REITs, literally looking at property by property, trying to figure out, are these things valued fairly or reasonably? The thing with this work that I'll tell you is that it is incredibly humbling because it is unbelievably boring and super fucking tactical. I mean, you got to be a worker in moments like this, a humble worker. Put your hat on, and just grind it out. And it is excruciatingly boring, numbing, time-consuming. But in it is where you'll find, I think, the nuggets. But that's what we're doing. We're prioritizing needs. We're asking ourselves what won't change. And then we're looking at things. And essentially what that leads us to is a bunch of offline businesses or hybrid businesses. The other part of our exercise is saying what things need to change. And all of that leads us to our portfolio of private businesses. And what we are doing there is we've put out feelers, and what we've said to people is like, look, we have buying capacity here. We're willing to be the buyer, but we want control. And so, I'm not interested in putting in $15 million in a Series C or a Series D extension round, but I'll buy your business for 50 million, 100 million, 200 million, and then I'll fund the rest of the J curve to get out of it, if we think that that solution is interesting. And so we're looking in healthcare, we're looking at climate change, we're looking at education, and those are the three areas that we think are going to change the fastest in this move to resiliency. So that's kind of what we're doing. But honestly, dude, it's not glamorous. It's super fucking tactical.